Assalamualaikum and very good evening to Dr. Mazlina and all of my friends. So today we would like to present about the revenue cycle. So first of all, we would like to introduce our group members. So myself, Muhammad Nafur bin Babasha, Muhammad Ilfi bin Rozali, Lukman Adli bin Muhammad Junaidi, and Umar anak perempuan Alagu. So Umar cannot join in this presentation because she have a difficulty and internet connection problem. So we will proceed to this presentation without her. So revenue cycle. The table of content for this presentation is the process involved in the cycle, source document involved, journal entries and account involved, flow chart for the cycle, this area in the cycle, control risk, inherent risk, important assertion for the cycle, relevant audit procedure for the cycle. So the process involved in the cycle is analytical procedure, test of control, and substantive procedure. So analytical procedure often involve running different financial ratio and trying to compare them to establish standards. For the revenue cycle, the auditor examines the gross profit margin and the amount of the growth experienced by the company in 1 year. As part of the analytical procedure, the maximum sales capacity of the organization should be analyzed, provided that its facilities and employees have been fully utilized. It will also review the account receivable in order to ensure that revenue do not increase. If so, this could indicate that the company is a credit risk and may have problem with the cash flow in the future. Test of control, management, adoption, and adherence to high ethical standard and strong control is a key component of an organization internal control, no matter which cycle they are relevant to. Testing of control for the revenue cycle includes who accept the approved credit sales, separation of duties for filing, shipping and recording of sales orders, appropriate documentation for collecting and depositing cash and recording receipt, appropriate authority and documentation for granting discount for early or cash payment and sales return, and management authorization to determine that an account is uncollectible and should be written off to bad debt. Substantive procedure. Performance of substantive tests will help to identify any error in the account or documentation related to the revenue cycle. These tests including checking the trial balance that the accountant creates at the end of the cycle, confirming the amount receivable with the company or the person who owes the money, and assessing the accuracy of the allowance for accrued expenses by reviewing the entity history. They also include watching, testing, and performing cut-off tests for all sales return, and cash receipt. To do this, the auditor examines all the customer-related documentation and also examine the journal entries. Either forwards from the initial sales order to the journal entries or backwards from the journal entry to the initial sales order to determine the accuracy of the order. Source document involved. In revenue process, there are 21 type of documentation that involved in this process. The important document and records are normally contained in the revenue process. Customer sales order are the one of the document in revenue process. This document will contain type of quantity of the product or service ordered by the customer, and also we could have our customer information. Salesperson is the one who is responsibility to prepare and forward this customer sales order. They will forward this in may various way which as fixed or mail perceive it. Next, it will be the credit approval form. In another type of the document, we use this document when customer purchasing with us on credit for the very first time. We use this way to investigate the creditworthiness of the customer. Let's say the customer wants to purchase additional product in the future. We need this document to establish the customer credit limit. Next, open order report is another type of document we use in revenue process. The open order report is for all the customer where the process of the product is not been complete yet. This report shall be reviewed like daily or weekly. Therefore, the all orders should be investigated to determine if there is any goods have been shipped but maybe not billed, or to determine why orders have been filed yet. Next, shipping document is one of the document in revenue process where it will be prepared every time when goods are shipped out to the customer. Normally, this will serve as a bill of lading and will contain information of the type of product that are shipped, the quantity shipped, and other relevant information. A copy of this bill will be given to the customer and another one will use to initiate the billing process. The important document and record that are normally contained in the revenue process. Next will be sales invoice, will be used to bill customer. In the sales invoice, it will contain information about the type of the product or service, quantity, price, and also term of the product. The original sales invoice will be forwarded to the customer and the copy will be distributed to another department within the same organization. Sales journal is used when the sales has been issued, where we should record in the accounting record. We use this to record any necessary information only. In his document, there is also some space to crediting various sales and also debiting account receivable. Customer statement is a document where we use to mail our customer monthly. In the document, we will have all the sales, cash receipt, and also credit memorandum transaction process. Account receivable subsidiary ledger will have account and the details of the transaction with each customer. A transaction will be recorded in sales journal and cash receipt journal is ported to the appropriate customer in the account receivable ledger. Edge trial balance of account receivable will be prepared weekly or monthly where it will be summarized all the customer balance. Customer balance will be reported in many categories. It will be based on the time expired. The category which is edge trial balance of account receivable will be used to monitor the collection of receivable and also to make sure that the details of the account receivable subsidiary ledger agree with general ledger control account. Remittance advice will be forwarded with the customer bill and also will be written the customer payment for goods and services. It will contain information regarding which invoice is being paid by the customer. It will be turned around document where a portion of the sales invoice serves as a remittance advice that is written with the customer payment. Cash receipt journal will be used to record the entity cash receipt. It will contain column for debiting cash, creating account receivable, and also crediting account such as a scrap sales, skills, or interest income. Cash memorandum will be used to record credit for the return of a goods in customer account or to record allowance that will be issued to the customer. It is also same with the sales invoice that may be proceed through the system. It not the same way as sales invoice and it will proceed through the system in the same way as a sales invoice. Right of authorization is an uncollectible account. This account is normally initiated in the credit department with the final approval for the right of coming from the treasurer. The type of transaction will be processed separately or as part of the normally stream of sales transaction. The major function document is for selling a good or services at price and term that are consistent with the management policy. Order entries of a new sales order into the system. It is for sales or services which will be consistent with management authorization criteria before entry into revenue. Shipping shipping document should not be providing without proper authorization. The important part of the control is authorization control. The function of it is to ensure that customer order is filled with the correct product and quantities. It helps to make sure timely billing of the customer where completed orders must be properly forwarded to the billing function. It will be shipping is often completed with a separate shipping department. Account receivable is responsibility for make sure whether all the bill uh, adjustment and cash receipt are properly in customer account receivable record. The entries in customer accounts should be made from the authorized source documents such as sales invoice, remittance advice, and also credit memorandum. General ledger main objective is in the term of the revenue process, it is to ensure that all revenue collection and also receivable are properly accumulated, classified, and summarized in the accounts. Cash receipt will make sure that all cash collection will properly identified and properly deposit intact at the bank. So next will be the journal entries and document involved. So for the billing departments, debit accounts receivable, credit sales. For inventory control, debit cost of goods sold, credit inventory. For the cash receipt, debit cash or banks, credit sales or bank account receivable. So for the flow chart for the cycle, so start with the sales order. If the cash sales will be proceed with the cash receipt and then will be proceed with the billing and then final stage will be the shipping. If the credit says we need to have the credit approval after the credit department approve the credit, so that will be proceed to the next stage, which is the recording in the account receivable, and then proceed with the shipping. So next, I will pass to the Hilfi.
Okay. So, next, this area in the cycle. First, control risk, and second, inherent risk. For the control risk, control danger, which is the danger that and mistake or fraud that may occur in end statement and may be true, either individually or in conjunction with other errors, would not be avoided or identified in a timely manner by the company's internal control. Second, the entity's risk assessment process. Auditor have to understand on how management consider risks that are relevant to the revenue process, estimate their significance, assess the likelihood livelihood or their occurrence, and decide what action to take to address those risks. Next, control activities. It is about the reliance strategy is adopted for the revenue process. The auditor have to understand the control that exists to ensure that management's objectives are being met. Uh, Next, information system and communication. This is for the major class of transaction in the review process. The auditor has to obtain this knowledge, which is by processed by sales, cash receipt, and sale return. And the sale return and the allowance initiates accounting records. Third, supporting document and accounts that are involved in processing sales. 4. Cash receipt and sales return allowance and allowance. 5th, the flow of the transaction. 6. Process used to prepare estimate for accounts. Okay, next, information system and communication. The auditor can develop an understanding of the revenue process by conducting a walkthrough. This will involve the auditor walking a transaction through the accounting system and documenting the various functions that process it. Next, monitoring of control. Here, where the auditor have to understand the entities monitoring of control in the revenue process. This includes on how to understand how management assess the design and operation of control in the revenue process. Second risk is inherent risk. Inherent risk is the factor that may affect the revenue and also the cash transactions as well as the financial statement account affected by those transactions. The assessment of the potential effect of factors is the one of the input for the risk of material statement. There are 4 factors, which is first, industry related factors. Second, the complexity and the continuous of revenue recognition issues. Third, the difficulty of auditing transaction. And last, account balance and also misstatement detect in prior audits. Next, industry relate to the factor. Factors like the profitability and health of the industry where entity operates, level of competition within the industry, and the industry rates of technological change affect the potential for misstatement in the revenue process. Next, the level of government regulation within the industry will affect the sales activity, where the industry are regulated by legislation restricting unfair trade practices such as price fixing. A number of industries are more highly regulated. Next, the complexity and the continuousness of the revenue recognition issue. Revenue is not a major problem because it is recognized when a product is shipped or a service is provided. Therefore, some entities, the recognition of revenue may involve complex calculations. Therefore, misstatement detecting in pre-audits. The presence of misstatement in previous is a good indicator that misstatement are likely to be present during the current assessing the potential for misstatement in the revenue process. And last, the difficulty of auditing transaction of account balance. Accounts are difficult to audit, can pose inherent risk, problem for auditors. Risk of material misstatement for entities is a function of factors such as the complexity of the customer base and reliability of the data available to the test the account. Okay, next, the important assertion for the cycle. Occurrence. Occurrence test whether the revenue transaction recorded in the accounts of the client actually exists. All revenue should be recognized and recorded on the actual basis of the accounting, regardless of whether the payment has been received or not. In most cases, this happens when the goods are delivered. Example of the session test of the occurrence are select an example of record sale revenue transaction. Next, to watch select the sale invoice transaction to ensure reported transaction are focused on sales invoice. Next, trace sales invoice to customer order and bill of lading to ensure that sales have actually happened and goods have been shipped to customer, and also can scan the sales journal for duplicate journal entries. Okay, next, second decision is completeness. In the audit of revenue, the completeness check that all the revenue that actually happened has been reported in the records. The assertion of completeness here is the opposite of the assertion of occurrence above. While the occurrence test the revenues recorded to ensure that they actually exist, and the completeness test the revenue generated to ensure that they were recorded. Example of the test of completeness is choose a sample of bill of lading, place selected invoice on sale invoice and sales journal to ensure that they have been reported as sales revenue. Scan the sequential number of sales invoice in the sales journal. Ensure that the missing number are not unrecorded sales and provide an appropriate explanation. Okay, third is accuracy. Accuracy test to see whether the record revenue transaction are error-free. Typically, we check to see if the sales invoice prepare are mathematically corrected or and whether no missing sum in registered. Example of the test, the statement of accuracy are select a sample of invoice for sale, verify the selected sale invoice with supporting document to ensure that they are accurately prepared. Next session is cut off. Cut off test whether the revenue transaction are recorded during the correct accounting period. Sale revenue may be recognized in the wrong accounting period due to the complicated process of ordering, shipping and selling invoice, or the customer may intend to move accounting transaction from one year to another in order to increase the bottom line. Example of the cut-off precision test are select a sample of sale invoice around the year end, inspect the dates on the invoice and compare them with the dates of dispatch of goods and trace to dates recorded in the sales journal and accounting record to ensure the correct accounting period entries, and also select a sample of return document for sale return around the year end and trace to the related credit entries. Okay, the seven next is relevant audit procedure for the revenue cycle. First is analytical procedure. The tendency to look the gross profit margin and the total number of growth experienced by the company in 1 year. The higher trading capacity of the organization should be analyzed, provided that its facilities and employees are fully utilized. It must also investigate the account receivables in order to ensure that sales do not increase. This could indicate that a company is a financial liability and may have difficulties with cash flow in the future. Next, the procedure is performance of substantive checks. This is to detect any mistake or defect in the report or document relevant to the sales cycle. Include verifying the trial balance that the accountant produced at the end of the process, confirming the amounts receivable with the business or the individual who owes the money, and evaluating the consistency of the deduction for accounts receivable by examining the entity's background. This is also include vouching, tracing, and performing cut-off tests for all sales return, and cash received. To do this, procedure, the auditor examines all the customer-related documentation and also examines the journal entry, either forward from the initial sales order to the journal entry or select backward from the journal entry to the initial sales order to determine the accuracy. Okay, next, I will give to Lokman Ali to continue to the case question.
Okay, the case question is related to revenue cycle. First, identify the major factor affecting client business risk and acceptable audit risk for this audit. The factor affecting client audit risk is the client has largest account receivable, where this will give an impact in incremental of bad debt, which is client have risk of unable to collect the debt. Next is, what inherent risk are you concerned about? The inherent risk for small town regional hospital that I concerned about is that the client has largest loan payable and the bank has limited the time of payable, and the bank told the client to pay the loan immediately. With the low income that faced by the client, I worried that client will sell the hospital and use the money to pay the loan. This is also will give curiosity to me whether the client will going concern or not in the future. Next is, in this audit of the sale and collection cycle, which type of test are you likely to emphasize? Type of test that I will emphasize is to test control, where I need to determine the level of risk of internal control component, which are control environment, entity risk assessment, control activities, information and communication, and monitoring. If the internal control at higher risk, I will perform substantive strategy, and if the internal control at lower risk, I will perform reliant strategy. For the following, explain whether you plan to emphasize the test and give reason. Test of control. According of this case, I will plan to emphasize this test of control. This is because that the internal control for this case are so weak, as they have shortage of accounting, which may the possibility that the client not segregate the duties is higher, which may give result as error with their accounting and bookkeeping. The assertion involved in this test of control are: first is occurrence. What is occurrence? Where all revenue and cash receipts have been recorded have occurred. Inspect the document and as an evidence that the event are truly occurred during the event. Next assertion, completeness. Definition, where all the revenue and cash receipt transactions should be recorded have been recorded. The audit procedure is perform a walkthrough process on sales and observe the sale that made by client to ensure that sales have been recorded. Next assertion is authorization. The definition is all revenue and cash receipt have properly authorized. The audit procedure for authorization is inquiry the management who are responsible to authorize and check the proper document whether the sale are authorized by right person or not. Next assertion is cut off. Cut off is all revenue and cash receipt transaction have been recorded in the correct accounting period. The audit procedure for cut off is identify the document that the document is pre-numbered and check the documents such as invoice where the accounting period in document and recorded are recorded in the same accounting period. The next assertion is classification. Classification is all revenue and cash receipt transaction have been recorded in proper account. The audit procedure for classification is review the journal and ledger and compare it whether it is recorded in the right account, and identify the document involved such as invoice, etc. Substantive test of transaction. If substantive test of transaction is to measure the operating effectiveness of internal control and the monetary correctness of transaction in the accounting system. As an auditor, I should emphasize this test of transaction to analyze the effectiveness of internal control in preparing the document and recording the accounting system in correct manner. Next is analytical procedure. The analytical procedure is very important to emphasize in auditing revenue cycle. This is because with analytical procedure, the auditor can make comparison of financial performance between current year and prior year by calculating the company financial ratio. With analytical procedure, auditor able to identify the level of client risk, and also can identify which particular of account contain higher risk. Next is test of detail of balance. The test of detail of balance collect evidence that the balance and underlying transactions associated with clients' financial statements are correct. As an auditor, I will plan to emphasize this test because this will let me to perform in my audit procedure, such as vouching invoice, tracing bills to customer, and sending the external confirmation to the customer for the verification purpose. I think that's all for revenue cycle. Thank you for watching. We are from Group 6.